it always starts with the people. And if you have the engineering talent that now sees as well that you can become an entrepreneur and that's not a suicide mission, AI is, according to me, an area, well, if not on money terms, on human capital, brains, we
Yeah.
will be competitive.
Hi everyone, my name is Miguel Magalhães. I'm the head of content and partnerships at the Next Big Idea, and in this edition of Web Summit, we'll be conducting a series of interviews with investors and startups to analyze the ecosystem of innovation in Europe, how startups are performing, how investors are performing. And in this year, I'm lucky enough to be once again with Bjorn Tremmerie. He's the head of venture capital at the EIF. And Bjorn, this year, last year in 2023, we discussed a lot how it was becoming a challenging period for a lot of startups and a lot of VCs. 2024 brought a lot of good news, I think, for a lot of sectors, and we have been having fast-growing sectors spread all over Europe.
Yeah.
For you, what are those sectors compared to what we
Yeah.
had discussed in 2023, and what are the reasons for those sectors to be performing so well?
Yeah, so historically we've seen if over the last 9 to 10 years, one sector that absolutely needed to grow a lot because we had an urgency at the planetary level, that was the climate, the clean tech area. That sector has grown tenfold over the last 9 to 10 years, and that will continue to do so over the next years as well. But also next to that, we've seen a move towards more deeper tech sectors, so those have grown, and there's a reason for it, of course. In Europe, we need to be more autonomous. We need to have increased sovereignty,
Yeah.
control over our fate. So what do we see there? We saw that, for instance, mobility increased a lot, but also robotics increased a lot. AI,
Yeah.
flavor of the day. But then also in areas such as semiconductors, we see that there's a movement, a catch-up going on, and we have some big semiconductors players. Take an ASML from the Netherlands, that brings that certain ecosystem that is vital and that allows growth in Europe as well. So I would say deep tech and climate are by far the sectors that continue to grow, and rightly so.
One of the reasons for a growing interest in investing in those sectors and allowing them to grow in the European context is the competition that Europe is facing as a market with regions such as
Yes.
such as America,
Yeah.
Asia. How do you feel, and in those sectors that you mentioned, which are the ones where you can clearly see that Europe has a competitive advantage compared to the US or to countries like China, for example?
Yeah. Well, in one, and again, I named it the flavor of the day, but if you look at AI, money-wise, we're not competitive. If you see that the 10 billion is invested by Microsoft alone in OpenAI, but you look at the human capital that we have, Sequoia, one of the oldest, largest, most successful fund managers out there from the US, on their website they have a study, and they've analyzed that there's 30% more engineering talent per capita in Europe than the US, and almost 3 times as much capital, human capital in Europe compared to Asia. It always starts with the people, and if you have the engineering talent that now sees as well that you can become an entrepreneur and that's not a suicide mission, AI is, according to me, an area, well, if not on money terms, on human capital, brains, we
Yeah.
will be competitive. Also on the climate sector, also fastest growing, because Europe has taken the initiatives and the regulation to actually contribute to a planetary saving action. I also think that if you then look on fintech and on software, we're catching up. Fintech, you have the banking license. If you have a banking license in one member state, you can be immediately operating in the 27 member states. So also there I see that we have a competitive advantage compared to the US, which means that we can see large caps in the payment systems. We are as competitive in Europe with some of the Americans. The only thing we don't have yet is a payment backbone like Visa or MasterCard, but hopefully in the
Yeah.
future someone will come up with something like that too.
And across the last year, we have been discussing on lots of industries that you mentioned: energy, fintech, AI. But one issue, and I think that the EIF wants to play a role in that as well, is how can it support booming industries as well that have probably startups that are not as well funded, or the capital that is being deployed in those industries is not as high as in those sectors that you mentioned. How do you feel that the EIF can support those industries, those startups, and allowing them to take the steps to reach industries that now are receiving the greatest share of the investment across Europe?
There we're a bit dependent on the policymakers. So EIF strategy, we have our own execution strategy within the objectives that we are given by our mandators, the European Commission, the European Investment investment bank, member states as well. So there we're a bit dependent on that. But if sectors are considered as strategic for the European sovereignty and also autonomy, take defense, that will be a sector that we will be increasingly paying attention to as well. So we will be getting mandates to support underserved sectors. But even sectors that are already being served need to continue getting attention from the the contributing parties, my money providers, to make certain that we can continue investing in those sectors. The same on the sectors is a bit what we're trying to do on the geographies as well. We're trying to make certain that any entrepreneur, wherever he or she is based in Europe, can get access to capital, and you don't necessarily always need to move to London, Paris, or Berlin to do it. So, both on the sector and on the geographical span, we try to spread the money in a way that everybody's getting a little bit of the pie.
In terms of industries, in
Yes.
these booming industries, in your role within IF, how do you try to keep up with the knowledge that's being generated on the industries? Is with relationships with the VCs, with the startups, with universities? How does that ecosystem work?
Well, we are at the IF. We're a fund of funds, so we don't need to be the experts ourselves. We need to be an expert in choosing the right people, and those should be people that know enough about it. So, as such, we don't necessarily need to be an expert. I try to keep up on general trends by interacting with our policymakers, interacting with industry, being present here at the Web Summit, keep an open eye and ear as to what's happening in the industry. But most of all, I tap into the knowledge of our fund managers when they pitch to us with ideas. We want to be the next space tech fund. Okay, what is space tech really about? I want to raise the next semiconductor fund. What is it all about? About photonics and electronics and hardware, software components that come into the whole value chain. So that's a bit how we keep up. But we're not necessarily the one that need to come up with. We're not saying now you need to invest there. That's really coming from the policymakers. And now we need to make certain that we understand enough how the sector works. We're teaming up with the Commission. We're doing workshops. We're interacting with participants, stakeholders on space. For instance, the European Space Agency is one of our partners. The European Union Space Agency is also one of our partners. So we don't try to reinvent the wheel. The expertise is there. We just need to have access to it.
Yeah. And you mentioned the idea of the EIF being the fund of funds. So what would you say are the greatest challenges of aligning the strategy that you have overall for Europe as an ecosystem with the strategy that each of the funds that you work with try to deploy in a range of areas like sustainability, deep tech? So how do you try to work with them to ensure that there's an alignment that you can move forward together?
Well, one of the alignment needs always to be there, so we want to feel aligned with the fund manager, but we try to impose as well, if we're selecting a fund manager to get money out of our space program, we want to make certain, of course, that in the contract there's a minimum return in the sector that is actually funding that, so that is contractually regulated, but the contract can only reflect a reality or an intention that we have tested. So we would test any intention from a fund manager on a strategy. We would test that whether the manager has either a track record or expertise in the field, and then we translate that expertise or findings, we translate that in hopefully not a too cumbersome legal document that sets the boundaries of what the fund managers need to do. and then we are auditors as well, and the auditors will check, and we will check as well, that the people that we entrusted with the money, and not only us but also the private sector, that they're behaving and are staying within the boundaries that are set out there.
In one of the previous questions, you mentioned the importance of the European talent and how can you retain it in our ecosystem. And one of the struggles that Europe historically has faced as an innovation ecosystem is the idea that a lot of European companies that start growing their projects here, once they want to achieve a greater scale, they move overseas to the US or to other countries. What steps is the EIF taking to ensure that those companies that grow here, that scale, that find an interesting group of customers, don't feel the need to have their main operations in another region in order to achieve the scale that they want?
Yeah, a crucial question. I think initially, even a couple of years ago, 10, 20 years ago, even at the early stage, talent had to move already outside because there wasn't any money here.
Yeah.
The early stage part, you don't need to necessarily move to the US or to another region for the early stage. €1 out of 4 invested worldwide on the early stage is landing in Europe. So on the early stage, we're pretty much okay. It doesn't mean that it's perfect, more can be done. Where it's becoming indeed challenging is once that company scales, we don't have enough funds with deep enough pockets to lead a real growth round. Take 100, 200 million euro round. You need, in order to be a leader of that round, you need to be able to invest 50 to 100 million. And we only have a handful of funds that can put that on the table. So from the European Investment Fund perspective, we're putting in place a Tech Champions initiative. It's a fund of fund that is investing in funds with a target of raising at least 1 billion euros. And we have in the meantime already invested in 7 of those funds with 2 billion commitments, so half of the program currently committed. We're going to invest in another 8 over the next year and a year and a half. And we hope that by giving European managers the capacity to fund also a Series C, D, E, that the company does not necessarily need to go overseas, because often if you take American money, the Americans feel comfortable investing it in a Delaware Inc. They feel less comfortable investing in a Portuguese, I think it's an SA perhaps, or a Dutch BV, or a German GmbH and Co. KG, GmbH. So European fund managers are comfortable with these structures. So we need to make certain that at the late rounds we have the money to lead the growth rounds as well, and then hopefully the managers will make certain that the companies can stay a bit longer here, because there's also the capital. Ultimately, money talks.
I remember last year when you discussed, you told me an indicator that if we saw the evolution of the American market with the European market, we were a lot more similar in several of the investment stages than we were in previous years. I know it's just been 1 year, but how do you have seen that trend, and if moving forward in the next 5 years, and given what you just said, if we can achieve a place where exactly that happens, where money is no longer an issue for whoever wants to stay here?
Well, unfortunately, I think with the correction that happened in the market following the correction from the hype of 2021, many of the late stage investors, also American ones, they went closer to home, because again, valuations were as attractive now as they were in Europe. It's easier, you don't need to travel as much, it's easier to monitor the portfolio. So the challenge we still have is on that front, and I think that will continue for the next 1 or 2 years. In the market in its totality, I think Europe needs a couple of very big exits, liquidity events. Everybody's waiting for liquidity. Not a lot of exits are happening. But if we start seeing again very big, and when I say big, it's like 1 billion, 10 billion, 20 billion euro capital market capitalization
that
companies,
can be reinvested in the ecosystem.
Then it gets reinvested. A couple of years ago, less than 10 years ago, people were asking, when will we see the first 100 billion company coming out of Europe? Well, I'm happy to report that those following, it's not yet there, but Spotify stands at an 80 billion euro market cap, or dollar market cap. It's listed on the New York Stock Exchange, but it's still a European company. So I hope that if now from all this market correction that happens, you start seeing the good companies. I know in my portfolio of the funds, there's at least 10, 15, 20 companies that are waiting for an exit. Revolut is the highest privately owned company in Europe, valued at $45 billion. But if that transforms into cash via listing or what have you, and you have them 4 or 5 similar events, if not 45 billion at 10 billion or 5 billion or 15 billion, that will bring the attention like, hey, it's still happening. European technology is still generating good liquidity, is generating good returns. Currently, the investors are waiting to see whether the paper values are actually tangible. And over the next 5 years, I think that we will have seen that many of these companies that were poster childs will become really poster childs once they get returns, cash on cash for their investors as well. And that we need to be a bit more patient.
And do you believe that will likely happen in one of the industries, or that we have an advantage? So those industries that we are putting a bet on are the ones that we are likelier to generate this impact that then can be transmitted to the other booming industries?
Well, I said fintech is one where we have the unified market. Revolut is a fintech play. I think it's one of the success stories. I think they have really cracked the code, navigating also international markets. So fintech is one. I also think that if you look at some of the space investments that have been done, it's early days, but also a couple of years ago on stage we had a fusion company coming out of Europe. It's still early days, it's still a technology risk, but even on the energy segment, why would we not have one of the breakthrough elements in terms of nuclear fusion, which would be the holy grail, coming out of Europe? So I do think that in some of the fastest growing sectors, we will see some of the companies coming out that are really going to be changing the face of venture capital in Europe, as a perception worldwide that European entrepreneurship and technology investing can really make a difference at the global scale.
Bjorn, thank you very much for spending this minute with me.